Alright, good morning. Thank you guys so much for tuning into today's live stream. It is July 11th, 2025, and today is a Wednesday, or sorry, not a Wednesday, it is a Friday. And so let's see what we have for news today. So we have the federal budget balance here at 1 p.m. That's pretty much it for today, to be honest. Nothing too exciting. Next week we have core CPI and core PPI here on Tuesday and Wednesday. So there are some inflation indicators here for next week, but nothing too exciting here on Friday. So I'll get started with the technical analysis here for now. And so let's take a look at the daily candle that we created here from yesterday. And let's see. So this is the daily candle up from Thursday on NQ. And with the way that we closed here on the previous daily candle, I didn't necessarily have a daily bias, right? It's not concrete where we are going to go if we would take out the daily high or the daily low. And because we closed indecisively, I am going to just have to pivot and utilize a different time frame, such as some of the time frames on the intraday time frames, right? And so now that I have concluded that thought process, right? I'm not going to use the daily time frame. I'm going to go onto the intraday time frames. So depending on how this 4-hour candle closes and this 8-hour candle closes, that will give me a daily bias for the morning session today, right? So depending on how we close here on this 4-hour candle and this 8-hour candle will give me a intraday bias. If we close bearish on the 4-hour candle, then I'll be targeting the 4-hour low. And if we close bullish, then I'll be targeting the 4-hour high. Same concept applies here to this 8-hour time frame. If this 8-hour candle closes bullish, then I'll be targeting the 8-hour high. If we close bearish, then I'll be targeting the 8-hour low. These concepts where you can apply open, high, low, close, it's fractal, right? Prices is fractal, time is fractal, meaning these concepts could be applied to every single time frame. And yeah, so that's pretty much all that I have for the morning session now, for right now at least. So I'm just gonna wait and see how we are going to close here on the 4-hour candle and the 8-hour candle for a morning bias. I do want to take a look at ES and see if there's any SMT divergence here. So we actually took out, daily low here as well. It's a daily high. Alright, so let's take a look here on NQ and ES. So we do have a SMT divergence here right now there's a SMT divergence right here. So this swing low there's SMT there. And I do want to see if, so yes, we've taken out previous week's high and on NQ as well. However, there is a SMT divergence here. There's a SMT divergence there. That's interesting, but yeah, so there is some SMT divergence here at the lows between NQ and ES. I think it really just comes to how we close here for the 4-hour candle and the 8-hour candle before I really confirm a bias. But just keep in mind that there is SMT. I think us consolidating here, us kind of like just trading back and forth for the past couple of days, is due to the fact that we have made new all-time highs. This is, I mean, it's pretty normal, I would say, to see a kind of like a back and forth-ish, very consolidative state after completing a really major objective. And yeah, so you can see here we did take out these new all-time highs, or the previous all-time highs, and us consolidating, like I stated before, is would seem like the natural phenomenon, right? It just seems like understandable for us to be consolidating here due to the fact that we did take out all-time highs recently. So you just have to be really nimble coming into these upcoming days, maybe even weeks. But yeah, so far, I mean, it's pretty, as long as you don't force anything, as long as you don't get overly excited or really antic on trying to press a button, then you should feel a little bit more at ease. All right, there's no need for you to really go and chase after a setup. If your setup or if your strategy isn't there, then there's no point for you to be really forcing something to happen. Alright, so yeah, that's pretty much it. I do want to mention that there is, as today is Friday, you do want to keep in mind that we are nearing the end of the weekly candle closure. And typically, whenever a candle closes, we tend to close within a certain range in the candle. And because the candle doesn't always move in one direction, right? Once it's near its closure, it tends to have a little retracement back into its range. And this retracement tends to be about 2 to 3% or 20% to 30% of the range. Oops, that's not it. It is here. So that 0.2, 20% to 30% is where prices tends to have its closure. That's where I usually tend to see prices close, right? So apply the same concept to the weekly candle here. So this is the weekly high. This is the currently weekly low. And you can kind of anticipate that if we already made the weekly high and the weekly low, then if we are going to close bearish, then you kind of can make the assumption that we should close within that green box there. That green box is kind of the area where I would like to see prices close, right? And I'm not going to really be anticipating much of a drastic move lower or higher, right? Due to the fact that today is the last day of the week. So yeah, that's pretty much all for the TGIF. TGIF is essentially just another way of viewing weekly high, open, high, low, close, right? But you're paying more attention to the closure of the candle, not the expansion or the open of the candle, right? There's a couple stages in a creation of a candle, there's always going to be the open. And for instance, in this example, I'm going to, let's assume that it's going to be an up close candle, right? So there's always going to be the open, which is the first stage of a candle. There's going to be that manipulation lower. There's always going to be a move lower. And then after the move lower, we get the expansion. So let me highlight this. That's the first stage. That's going to be the second stage. It's almost as like it's basically AMD, but not AMD, because when people say AMD, it's just like it's just a lot of like fluff, right? It's a lot of fluff, but just pay attention to the candle's closure, right? So there's the open, which is the green box. The manipulation lower is that blue box there, right? So we're moving lower, and the red line is the expansion higher. And then what TGIF is we're trying to capture that move back inside the range, right? Because the candle doesn't always continually expand in one direction. So that's essentially what TGIF is, right? So there's actually, let me see how many parts there are to an actual creation of your candle. There are, whoops. There are 1, 2, 3, 4, 5. So there are 5 parts to a creation of a candle, right? There's the open, the manipulation, the expansion, the retracement back into the range, which is this right here is TGIF. Let me make a little. That's the TGIF right there. Is us retracing back into the range, and the closure. 5 parts, and yeah. I feel like this could be a really good video, to kind of break down how a candle was created, and and like based off of this right here, you can kind of make the assumption for the very next candle's creation, right? If you can kind of create a narrative for what the next candle should do, then you're going to have you're going to give yourself a bias, right? And then once you have a bias, then you kind of have to like dig for more clues, or dig for more confluences that support that narrative. And like if this were a real candle here, and this was an up close candle, then within the next candle here, I will anticipate for us to take out that candle's high, right? This, to me, this candle's high would be the objective for the next candle. And if that's the next objective, then I'm only going to be looking for bullish setups, right? In this case, I can show you guys through an example. I think it's a little bit easier for me to do so, but that's essentially like how you view prices, right? The best buys, right, are the lowest point in that up close candle, and the lowest point is always going to be, you can't always pick the very, very bottom, right? But if you know that the next candle is going to be open, low, high close candle, a bullish candle, then the best buys are going to be here. It doesn't matter where you buy, but it has to be below the opening of the candle, right? So the best buys, if you're bullish, are going to be below the open of the candle. The open of the candles here. So anywhere below that red line would be a buy if you have the setup and everything. Vice versa, if it was a bearish candle, the best sells are going to be above the open. It's not going to be, you're never going to actually enter at the low or the very high. But if you have a general idea that the low or the high of the candle should be below the open if it's a bullish candle, then you have a general idea and a general area of where you want to be buying, right? Alright, so that's that. We have about 9 minutes left until the candle's closure. And the way that we are closing here on the 4-hour candle and the 8-hour candle, it's suggesting the idea of higher prices actually, right? It's suggesting to me that we should take out the 4-hour high and perhaps even the 8-hour high. Alright, so just, watch really closely on how we close here on the 4-hour candle and the 1-hour candle. Closing pretty bullish so far. We have about 8 minutes left, and I do want to just go over the pros and cons pretty quick here, just so that I can get that over with. Alright, so some of the pros and cons from the previous week that I can carry over into this week is, first, continue to take consistent setups. You're going to always, or I'm going to always have to require a higher time frame objective, a model, and a entry pattern for every single one of my setups. In every single one of my trades that I'll review with you guys, they're always going to have the same outline. There are 3 main components that I always look for, which kind of makes every single trade that I take almost similar. It's just maybe at different price points or time zones, right? But yeah, so the first, continue to take consistent setups. Second, paying close attention to SMT. So the fact that, here I highlighted to you guys that there's SMT here is at the low, which gives prices the potential to reverse, right? If there's SMT, then it's understandable that we're going to continue, or not continue, but reverse in a different direction if there is SMT. And same thing on if there isn't SMT. If there isn't SMT, then you can kind of make the assumption that we should continue in that specific direction. It's not guaranteed, it's just more probable. So 2 things that you want to remember is a lack of SMT doesn't result in a potential continue. It doesn't result in a guaranteed continuation. It's just more probable that we should continue in that specific direction. So lack of SMT, potential of continuation. presence of SMT, potential reversal. So keep that 2 scenarios in mind, and SMT is going to be really beneficial to you whenever you are in a setup. Let's say you're in a setup and you're targeting a 15-minute high on NQ. On ES, it should be, those 2 assets are correlated, right? And so if NQ is targeting the 15-minute high, ES should also be targeting the 15-minute high. But let's say ES takes out its 15-minute high when NQ didn't take out its 15-minute high. Then that means there is a SMT, and that allows there to be a potential reversal. You don't want to be a part of a potential reversal, right? You want prices to continue in a specific direction, and so you want to move your stops to break even or end up closing the trade, and like just forcefully close it there, right? So that's how SMT is beneficial. Third, utilize every single time frame. There's vast amounts of time frames. There's the 1 minute, there's 15-minute, hourly, 4 hour. I could go on forever, right? Understand that time is fractal. Utilize every single time frame, because the fact that, you know, like I can apply these concepts to the 15-minute, where I can apply the open high low concept. Same thing here on the 4 hour time frame. Same thing here on the 8 hour time frame. Those things occur. They occur so often, and so you want to just keep that in mind and be very nimble, right? So that's the third. Last here is just to be patient. No need for you to really force things to happen. This is even more crucial when we are at new all-time highs, right? Once that really big objective has been completed, there's really no need for you to be forcing anything. Yeah, right? So be patient. Don't force things to happen. Allow it to come to you. And then to really summarize everything, take consistent setups. We are at new all-time highs, so be patient. Don't force things to happen. Maybe utilize the intraday time frames, and don't force anything to happen. Don't expect a really large move higher or lower on the higher time frames. You want to pay really close attention to the entry pattern. The entry pattern tells you a lot of information. I'll go over that later. And the last thing here is to track my journey. I'll go over a trade that I took this week with you guys, and yeah. So let's take a look at what's actually happening here on prices. So the 8 hour candle is closing pretty bullish. I can make the case that we should take out the 8 hour high. Same thing here for the 4 hour time frame. 4 hour candle suggests that we should take out the 4 hour high. And so coming into the morning session today, I will be most likely targeting the highs. Give me a second. I'm going to log into my trading account. And yeah, so there's that. So yeah, like I said, I'm going to be targeting their specific highs here coming into the morning session today. We have about 7 seconds left, and I would make the case that we should take out the hourly high, which is the same high as the 4 hour high, and expand towards the 8 hour high, which is that red line. And you can see that we respected a 3-minute fair value gap and made the expansion higher. I can't be a part of the setup here simply based off of the fact that we don't really have an entry pattern to take an entry off of. And so there's the morning objective. Let's take a look at alright, so this interesting. Just watch closely, right? I do want to see us take out that hourly high, and the hourly high is the same high as the 4-hour high, and the 4-hour high, let me make that a blue line. So because, and we just took that out, because the hourly high is the same high as the 4-hour high, you can make the assumption that we should take out the 4-hour objective within the next hour. And it looks like we nipped. Oh, we actually traded past the 8-hour high. So we've completed both objectives there. We took out the 4-hour high and the 8-hour high. It's pretty good. So there's that. So now that the morning objective has been completed, I'm not really going to be forcing anything else here. Alright, so to coming into the setup that I took this week, the idea here was that we should retrace back into the premium of this swing high and the swing low within the 50% of this dealing range. We should see a retracement because prices hasn't gotten an opportunity to trade up into this premium level yet, right? And so the idea behind this is that buyers, like if you think of this as a regular market, demand and supply, buyers are always going to be wanting to buy in discount. If you enter a store, you're more incentivized to buy in discount. For sellers, it's going to be it's going to be the opposite. For sellers, you're going to be wanting to sell in premium, right? You want to be selling when prices are high. And so apply that same concept, but to here. Because prices hasn't had the opportunity to trade up into a premium level yet, there is a incentive for us to see higher here. So that's kind of like the bigger reason for why I want to see prices continue in that direction. How I align myself with that is based off of the 30-minute time frame and the 15-minute time frame. So the 30-minute candle, it closed bullish. So apply the same concept that I have been going over and over this morning. That 30-minute candle, with the way that we closed, I can make the assumption that we should take out the 30-minute high within the next 30-minute candle, right? But if we zoom into the 15-minute time frame, I also noticed that the 15-minute high is the same high as the 30-minute high. This is something that I've kind of like picked up on after watching and reviewing prices for so long is that if the 50-minute high in this case is the same high as the 30-minute high, then I can make the assumption that we should take out the 30-minute objective within the next 15 minutes, if that made sense, right? And so I have a higher time frame objective and I have a model now. Both of those kind of components are suggesting for higher prices. We are wanting to see higher prices to retrace back into premium, and we are wanting to see higher prices due to the fact of the 15-minute candle and the 30-minute candle's closure. And so the only thing that I need left here is a entry pattern. And so the entry pattern of choice here for me was based off of this 1 minute candle, 1 minute fair value gap. And this 1 minute fair value gap supports the idea of higher prices, right? I believe I went over this with you guys a little bit earlier into this week, but I had a good friend ask me, like, I stopped using fair value gaps because I don't know which fair value gap should be respected. And that's valid, right? Sometimes you don't have a clear understanding of what fair value gaps should be respected and what fair value gaps shouldn't be respected. Well, the answer to that kind of situation is that the only way that you would know when a fair value gap should be respected or not is if you understand what the order flow is. If you're in bullish order flow, then bullish fair value gaps should be respected, vice versa for bearish order flow. If you are wanting to see lower prices and your model and your higher time frame is suggesting lower prices, then the fair value gap of choice wouldn't be a bullish fair value gap, but it would be a bearish fair value gap. It would be a SIBI. But more specific in this case, the 15-minute candle / 30-minute candle is suggesting for higher prices. Same thing for the fact that we should be retracing back into the premium. And so once prices allows the opportunity of a retracement, or more correct term is a rebalance of this fair value gap, then I will take my entry with the hopes that we respect it and take out the 50-minute high and then get that retracement back into the dealing range, right? I'm always still going to have a stop loss, however, right? It's not always guaranteed, which is why the stop loss is going to be needed. And let's see what happens here. So we get that rebalance into the inefficiency, into the fair value gap. We respect it. We take out the 15-minute high. After we take out the 15-minute high, we don't stop. We continue higher towards the premium of the dealing range. And then, so that's basically the setup. Very simple. Higher time frame objective, model, entry pattern. That's all you kind of require. And that's gonna wrap it up for today's live stream here. Thank you guys so much for tuning in, and until next week, be safe.